Hi, good evening, everyone. Welcome to today's webinar. My name is Nixon from CGS-CIMB, and I'll be your host for tonight. So before we start, I just want to do a quick system check. Can everyone see the slide and hear me clearly? If you can, appreciate, just type in the chat box yes or okay, so that I know that you are hearing and seeing everything's fine. Richie, thank you. Yes, thank you. Kailam, thank you. Neil, Alvin, thank you. Thank you. Okay, thanks for the response. So all system go. So welcome once again to today's evening session. This is the second market talk on Learn from the Pros by Wong Kon. Allow me to just run through some quick slides. This is a series of webinar from Learn from the Pros, which CGS-CIMB is bringing to the client like yourself this year. Besides Kong Hao, we also have Ho Seng Fu, who is a very experienced remiser with us. In fact, let me share with you what Seng Fu will be sharing with you in the coming months. We have actually gotten Seng Fu to share with us his trading secrets. So he has agreed kindly to do a workshop for all of us. It's going to be a 4-part workshop. In other words, once a week for 4 weeks, starting 15th of September, which is about 2 weeks away, and running every week from 7:30 to 9:30 for 4 weeks. So if you are interested, do sign up right now. You can use the QR code, or you can also use the link which I'm showing right here. Allow me also to maybe cut and paste the link for you as well. So hold on, let me try to get the link out. Okay, let me put in the chat box. Yes, this is a link for Seng Fu's Super Stocks Essential Workshop. This is the session that he's going to share with us how he actually picked super stocks, stocks that actually could give multi-baggers. So do take note. If you can, do join us in next month actually. So today is actually end of August. So it's actually tomorrow will be September. So it's very soon, in 2 weeks' time. And allow me also, before we start the session proper, just to share the disclaimer. Just take note that whatever we share tonight is for educational purposes and not investment advice. So for investment advice, do seek a proper profession, either your TR or your financial advisor. So with that out of the way, let me introduce our guest for tonight. We have none other than Kong Hao. Some of you are very familiar with him already. Kong Hao was a floor trader since 1995. And from there, he has moved on to different financial institution. He was also with the sell side as a broker. I shouldn't go into the word for word. You can read here. He is a very experienced financial person, and right now he is on the buy side as a retail investor. And really, we would like to hear from him his view as a retail investor. How does he see the market? And tonight will be very interesting, because tonight we'll be talking about ESG. I'm sure all of you have heard about ESG. It's kind of like a trend right now. A lot of people are talking about ESG, but what exactly is it? Does it make good investment? Is it a good investment thing to look at? All this will be interesting to learn and share. And tonight, I'm very interested also myself to hear from Kong Hao what his view is on ESG and how we can actually look at ESG as an investment opportunity and how we can profit from it. So without further ado, I'd like to pass the stage now to Kong Hao. So Kong Hao, please go ahead. Yes, Kong Hao, you're live.
Okay, so I think first of all, thank you, Nixon, and definitely CGS-CIMB clients for tuning in. So very quickly, I just want to move into today's topic. Then maybe we have more time for Q&A. And as usual, I will always like to go to the framework that what we'll be discussing tonight. And I think first of all, I'm just going to give you an objective of ESG investing. Then later on, we're going to move into the advantage of investing into ESG companies, and there's more and more companies want to be included to be ESG compliance, follow their guidelines. And then maybe I'll just give you a highlight of how to select ESG stocks and indices using the SGX platform. And I'm sure that the other exchange will have a similar platform as well, so you can take clue from there. And last of all, I think the more important topic here I felt that we're going to discuss is that we all know that the times ahead are going to be a little bit challenging. Inflation is getting a bit out of control, not just at home but globally. So I think a lot of policymakers has already warned us that we got to vigilant our livelihood, our business, and of course our investment as well. But I'm going to talk about investing strategy in ESG in a time of rising interest rate, in a time of high inflation, continuous inflation and interest rate. But what are the attributes that we can gather from today's discussion, and how can we invest in ESG? So these are the framework, and I think just now Nixon have introduced myself. I will not just elaborate further. So, but what I'm going to showcase to you is maybe a bit more on the long-term macro outlook. That my expertise is in the behavior science or the market psychology in identifying macro trend, and I study into the forensic price behavior as well. So tonight I'm just going to combine the price behavior and also the topic on ESG and what's coming up ahead on the continuous inflation, global inflation, and how is it going to affect the interest rate, and ultimately what are the attributes or how can we position ourselves in ESG investment. So I hope that we will have a good time together for the next maybe the 45 minutes I'll be sharing. So this is a disclaimer, a short one, a quick one, and what presented here is not a recommendation, so please consult your licensed broker, CGS-CIMB. And my mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk with market uncertainty, and like today, and moving forward. A lot of market uncertainty there, and definitely a bolder risk when opportunity arises. So we're going to talk about by then, when opportunity arises, how can we take advantage of the ESG list of companies as well. Okay, so very quickly, I'm going to move to the first part on the objective of ESG investing. Now, interestingly, you may want to know on the ESG investing are popular among which group of people. And basically, there are three groups of people. And towards the end, I'm going to talk about the fourth group, which is a very important group. In fact, the third group is also as important. Now, the first group are generally, they have surveyed that women are interested to invest in ESG, follow the guideline of ESG companies, women, high net worth individuals. And this is the third one, which is very important, the millennials, that they are born between 81 to 96, means that this year they're between about 26 to 41 years old. Now, why is it important, the millennials? Because they are the growing affluence investor group. So as year pass, the next 5 years, next 10 years, this group will shift to between 36 to 51 years old. So it's very important. So as year pass, it's a large group, very well educated, very savvy. And as year pass, they also grow to be richer as well. So this is a group where they provide liquidity in a time of uncertainty. So these are the important factors that we have noted. So later we're going to come back to this group again. Now, so in short, what is ESG? E stands for environment, and S stands for social, and then G stands for governance, of course. But I felt that between ESG investing, what personally I focus the most is the governance, the people, the company's leadership and management philosophy, practices, policy, internal control of what? Of both environment and social guideline of the companies. So when you able to look at the people, the management team, the board members, who they are and how they behave, then I think whether they can carry out the ESG guideline, I think that to me is important. You have to look at the people. And what is the environment is that the company operation, environmental impact, and environmental stewardship, that you need the governance of it. And then the social is that how company manage relationship with and create value for stakeholder. When we say about stakeholder, it means that this board, this management, this company, stakeholder refers to even the employees, the staff members, the supplier, the business associates, their clients, so all these are stakeholders. So whether this board of people, the management, the companies able to carry out this ESG well and ultimately bring good light to their company, it depends on the board. It also depends how they manage people, their stakeholder, who is their staff member as well. So in short, what is ESG? Personally, I just want to sum up. It's a big topic, but today I'm not an expert in ESG about training you if you're auditor, your compliance. I'm not expert in that group, but being an investor investing in ESG, that's my topic tonight. Okay, so now in short, how I look at ESG is basically company with good governance, which is important, and is socially and environmental responsible. When they follow certain guidelines. So once they follow certain guidelines, they are mindful, the board are mindful. And when they are mindful, whatever the thing, design, and act and plan for the company is always according to the guideline. So this is important. And then let me just share with you something about my experience, my first experience about ESG about 15 years ago. I think it's less than 15 years. I can't remember, about between 10 to 15 years back. It was the first, not the first time being invited to Malaysia, but when I was invited to Malaysia, and I just want to mention about investment strategy, trading strategy. So I have to showcase a case study, and I selected Genting, going to Malaysia back then. And then before I was there, of course, then the compliance have to check through the slides, and they told me, they rang me up, say, Kon Hao, you cannot showcase Genting in Malaysia. I said, oh, why? I thought that Malaysia, there's dual listing, so it's like a diplomatic kind of companies going to Malaysia, addressing to the license holder. I'm excited. I want to showcase about Genting, because Genting is like one of the superstar in Malaysia as well. So, but then later on, I begin to understand that because Genting is a gaming company, so they will avoid talking about Genting at all. So of course, then I stop it. So that was my first experience. Have a good intent, but I think I crossed the line a little bit. So thankfully, the compliance reminded me, so I did not present Genting in Malaysia. So that was my first experience. So in a way, this is related to ESG as well. So that was my first experience. Of course, along the timeline, ESG is still refining, and is finding some foothold as year passing by. So that was my first experience. So now I'm just going to give you the conclusion. And before I end this, my topic, I'm going to come back to this slide about conclusion. But I want to start off, before I present the rest about conclude, I want to give you my conclusion about ESG investing. So the topic is about riding the ESG wave in the next, is it the next mega trend, the ESG wave? Now, we have to understand that when we buy a company that is following the guideline of ESG, when we invest in a company, so a lot of us have forgotten about this, is that why is it so important that ESG, which I felt that I'm going to give you the answer, in a time of uncertainty in the future, maybe not now, but in the future, because why? ESG is still evolving. It will take some time, but I think the next 5 to about 10 years, you're going to see more and more of it. It's going to take a better shape. So now we have to understand that when we invest in the shares, we are a shareholder. Now, a lot of us have forgotten about it, but when we invest in a share, we are literally a shareholder of a listed company, be it 1 share, 10 share, 100 shares, or 1 lot, or 2 lot, or 10 lot, or 100 lots. We are a shareholder. Now, so it's very important that we have to send a signal to the companies. As a shareholder, why I invest in ESG? Because I subscribe to the idea of ESG. Yeah, that means you have to be of good governance. So in the context whereby I selected a board in a way, yeah, I select because you're the shareholder. You selected a board member and they'll do good to produce good work for that company. At the end, who will benefit? The environmental will benefit at large, and also socially will benefit. And so is being a shareholder myself. So now, collectively, if every investor can think like that, you are a shareholder, so you cast your mandate to those group of company that is ESG compliance. So in a way, you're also going to give the ESG compliance related companies a little bit stress and pressure that they have to, whatever they do, they have to follow certain guideline and be mindful, and since they're mindful, whatever they think, act and plan will be according to the guideline and will be doing social and environmentally good. So that's important. And later on, we're going to come back to explore. And that's why the important thing is that as the environment is getting a little bit more challenging, and more, I think will be more challenging. I think over my, I'm 50 years this year, not yet celebrating my birthday, but soon, I'm 49. But since I'm 50 years old, I think I've been through a few cycles here. Is that when I was serving my national service in the army. So no, then I was already out. I experienced about Asia crisis. Then after that, along the timeline, I experienced the .com crisis. Then after that, I experienced about 08 crisis. And recent years, we experienced the COVID-19 crisis. But all these crises, I can say that the few that I've named, the major one, my experience that we have experienced a V-shaped recovery, all these crises, be it 97, .com, 08, the recent one was the COVID-19 crisis. All these recovery are V-shaped recovery. But what I'm concerned here, we're going to talk about it more later on, is that I think the next crisis we may be heading towards maybe inflation crisis, and that may not be a V-shaped recovery. We may be heading for a U-shaped recovery. It means that as the market may have a lot of headwind, and it's going to take a long while to recover. Now, so it's important to understand the millennials here is that they're a big group here between 26 and 41. They're knowledgeable, they're professional, and by then, few years down the road, they'll be powerful and rich as well. So this group provide liquidity for the market then, which is important. Okay, so I'm going to come back to this group again later on, but let me just give you a background about ESG and what is coming ahead about inflation pressure. Okay, now let's talk about the advantage of investing in ESG companies. Now, so what's my take here is that now when we look at ESG, it's not about values. Of course, that's on the creator side, but as a investor, when we invest in ESG companies, now when you are in the board, you have to understand that ESG is not about value, means that it's not about dollar value. It's creating value. But as an investor investing in ESG companies, ultimately what we're looking for is not just value, but also the dollar value as well at the end of it. Now, then the other part is about ESG is about the governance ability to create and sustain long-term value in a rapid changing world. So again, we have to focus on who are the people who are on the board and who are managing the company. They play an essence in how we invest into ESG company. Now, in short, when I say value is that these people, can they create a system or culture that is environmental and social responsibility? Can you see that in them? So that will help us to also understand whether is this company are trying to greenwash or anything. So you try to buy small shares, attend the AGM, talk to the board members, and you got to get a sense, a feel of them. How are they? You know, are they just going to do just greenwashing, or are they seriously trying to follow this mandate about ESG? Now, in short, the company with good governance and is socially and environmentally responsible. Okay, now let me just give you the other part here is that the quality of governance in the determination factors of ESG success, they are the few. That means when we look at a board member or the management team, board and management team, we need to look at their qualification. So earlier I mentioned about governance is very important to me, in my opinion, because it will determine whether can they keep up with the ESG mandate and guideline. So you have to look at their qualification and whether they have the ability to carry out or integrate this ESG factor into their business planning. And do they have the ability to account for all these measures? And last of all, do they have the approach in counseling the management? Means that they're able to bring down this ESG culture from the top to the management, to their staff member, to their stakeholder, to their clients. So do they have the ability to do that? So once again, the people is important, in my opinion. Now let's move on to the next one. Then after that, we're going to do some practical work here, where I'm going to share with you how to select the ESG company in Singapore context. But of course, if you're listening from other part of the world, it will be the same platform, a similar platform in your country, home country. I'm sure you're able to find that. Now, so what are the advantage of investing in ESG company? I'm just going to give you some example here. First of all is that for the ESG, like what I said, the governance of the people managing the company, they will have certain guidelines to follow. And this guideline is still evolving for ESG investing. And once they have a guideline, the board, the management will be mindful. When they are mindful about what? Mindful about to reduce risk for the company at all times. So when they're mindful, whatever they think about their ways is to mitigate risk to the enterprise. Say, for example, one of the examples is that this company may be always wanted to be friendly to neighboring countries, suppliers. They always have the diplomatic clause in them that no matter what, we have to have create a lot of supply chain. In case something went wrong, we still have multiple supply. So they're always thinking about how to hedge, how to risk adverse in case of unexpected situation that happen. Now for ESG investing, the other one is that they are mindful about always increase opportunity and growth. And how do they do that is that once they have this guideline, they're mindful, their thoughts and their ways of doing things, they're always thinking about how to support, how to identify a new market, customer and product services. Say, for example, that let's say in the food business. Let's say the food business is particularly more towards a certain race, but they also want to include the halal and kosher, say for example. But in order to include the halal and kosher, they have to do a lot of work, employing the staff members to get the certification. Now, all this at the beginning will be quite a bit of tough measure, a lot of money to be spent, but yet they want to do it because they believe that in a matter of time, they hope that it will be able to capture a wider audience. So that's part of advantage of investing in ESG company. Now, the next one is the organization resilience. That means they are anticipate and adapt to technology, customer, and regulatory changes. Say, for example, I would talk about the EV companies. Now, maybe not about the EV companies, maybe the traditional car makers, the petrol car makers. Now, I'm not going to talk about any other brands because then I may send a wrong signal that I'm promoting the brand. But say, for example, even today, EV, most of the company is a loss-making company except for Tesla. And so to have an EV, electric vehicle company, is that you have to spend a lot of money on research at this point in time, building new plant completely because the chassis, everything about building the EV is different. Yeah, so you have to spend a lot of money. Now, so if you are a car maker company, it's always easier to just make money from the traditional petrol company. But this particular company, say, is an ABC company. Yeah, they are a petrol company, but they have size, they have the ability to also expand to EV. But knowing that that's the future, knowing that that's a green environmental, and it's also socially responsible for them to do it. So while they're making the production line and their petroleum-driven car company, petrol car vehicle rather, in the same time, they also develop their EV line as well. So that is something about the organizational resilience that is preparing for what is coming ahead, the transition from petrol to EV. They also do not want to miss out on that as well. So that's one example I can give it to you. Now, then the other would be advantage of investing in ESG company is the workforce productivity, that it engage and empowers employee, increase retention and attract best talent. You know, in today's world is that one example here is that in China last year, because of the 996 culture, 996 means that they used to have this culture of working 6 days a week, working every day from 9 a.m. to 9 p.m. And that's common in China then, okay? And it kind of, it make a lot of people burn out. And so what happened to 2021 in China is that employee is a stakeholder of a company. If you cannot drive your employee to motivate them to work for a good cause, it'll be very tough going. So what happened to China is 2021, they have this movement called the Tanping. Tanping means that your life flat. I don't want to work anymore. You know, I just want to take it easy. So it has kind of transformed to 2022 from Tanping to Bailan. Bailan means that they prefer to rot. Yeah. So it doesn't mean that they do not work, but they just go to work, spend their time, get the job done, but they are not motivated to give value to the company. So what they want is a life. They find that working 996, there's no life in that, and what's the point in working so hard? And they don't make extra money by working hard. So they just want to deliver what is assigned to them, and then at the end of the day, they hand up their assignment, their work, and then they just want to continue to enrich themselves in some extra curriculum, so on and so forth. And this culture has spread to United States this year. It's called the quiet quitting. So it's very similar to the Bailan culture in China as well. So people are basically just go to work, get a job done, but they're not interested to provide value for the company. So by and large, over the long term, it will not be good for the companies. It will not be good for the society. So if an ESG company knows how to enrich their stakeholder, who is their employee, their life, their livelihood, their aspiration at work, I think that will bring total productivity to the workplace. So that's one of them, one example. So do look out for all these companies. These are some of the element that you can look for. Then, of course, reputation and stakeholder trust. So once the ESG able to deliver this, or at least you find that they're able to carry all these guidelines out, so you naturally bring goodness, bring trust to their stakeholder. For example, investor like yourself and myself, that will look out upon this company, that this company can do. So whatever guidelines given to them, I know that they're doing their best to hold things together and work for the common good. So that's, you'll bring reputation for the company. So reputation is important in a time of uncertainty, because if I'm interested, or if you're interested in that company, in a time of uncertainty, the important thing is that the company must have liquidity. So shareholder also provide liquidity for the company. So that's the key point. I think you're catching it. About on top of uncertainty, ESG may provide liquidity for the company. We're going to explore a little bit more about that. But before that, let me just go to the selection of ESG stocks and indices before we talk on the very juicy topic tonight about investing in ESG in a time of rising interest rate environment or inflationary pressure. Now, I think one of the platform in Singapore and SGX, I think in ESG started in Europe, and they're very active in it until today. Then in Asia, I would say that Singapore is really taking a strong stand about ESG, and also definitely SGX Singapore Exchange are taking a very active role in recruiting of ESG compliance company as well. So if you're keen to look at it, you can use it as a platform to study about ESG related company. I think they have a very good informative, if you're interested in ESG investing, do take some time. It's just a few pages, but it's a lot of information, and they bring you to many links. I'm just going to quickly show you. So if you're interested to find out who are the ESG companies, who are they, and want to find out more about them, you can go to the platform and read more about them as well. So what I could do is that go to this link. Maybe I will just send you the link as well. Give me a moment. I will send it to the chat box. Okay. I'll just put it in the chat box. And I hope I can find where the chat box is. If not, towards the end, I will give it to you anyway. Oh yeah, I found it. Okay. Let me just share to everyone. Okay. So you can have it. All right. So now you bring you to this page. I'm going to go to the next page. And what I can do is that maybe after this session, you can just go and explore this platform in SGX they have provided. Let me just go to the ESG stock rating here. So of course, if you are interested in the Singapore ESG related stocks, what you could do is that you can go to this website I just shared with you, and you can do a research on the end here. Is that one of the way to look at it is to look at the company itself. Then the other one is to look at the ESG stock rating. Now, so there are as I enter into it, you can see that there are a lot of rating companies. So you could see all these. I'm not too sure you can see my cursor, but starting from FTSE Russell, MSCI, all these are rating companies of, say, for example, the first company is called AEM. Now, so you have to understand that all these rating companies, I do not know, and we do not know what are the criteria that they have to give them the BB rating or the A rating. So I just want to bring your attention to maybe the last one on China Aviation. Okay, so you cannot just look at the rating alone to decide that, oh, this is a good company. If they're able to score all A's or all low risk, that's it. No, these are just a guideline reference because all these, we do not know what is their criteria, right? So for example, for the China Aviation, you could see that the MSCI rating, it rated this company as A, but for the other one called the Sustainalytics, the rating is high risk. And of course, then the ESG score is 14, so it's lower compared to the rest. So where's the basis? We do not know. So this is just a guideline. And what you can do is that at least you get some feel about this company. Of course, you can read more about it. So next one is that you can go to the sustainability report and you go and click the search report and it'll bring you to this company. Now, then, of course, the first company you can see here is called Del Monte, and you can read about their sustainability report and see what they say about their company in following the sustainability guideline. So that's how you get yourself acquainted to learn more about the company itself. So within the SGX platform, I find that is quite reasonable and a lot of information. And there's a lot of things to read if you want to get into it. Now, the next one is that the third-party report, I think, is pretty interesting as well. Instead of just reading what the company says, maybe the third-party report, you can read about what are the third-party says as well. So within this third-party report, if you want to learn more about ESG investing, you are able to, as you read, you'll find out more and more, you'll get yourself more equipped. It's not just towards one particular company, so they also give you insight about what is the ESG investing environment right now. Okay. Then for those interested to invest in the ESG fund, because you find that the to select the company is very challenging, very tough. I understand because ESG to me is also relatively new. So the other one is that you may consider the ESG index fund or ETF. So once you go to the ESG indices, you're able to find, I just highlight two of them. There's a few. These are the few of them. Say, for example, the SGX UOB AM, they have this green REITs index. So what it tracks here is that this index tracks the performance of Asia Pacific listed high yield REITs. And then the other one is that one of it is quite popular. It's called the ESG OCBC carbon index fund, low carbon index fund. So what it tracks here is that first of its kind, it tracked the 50 Singapore or globally listed companies domicile and incorporated in Singapore based on the carbon intensity performance. So these are the companies. Just want to give you some highlight here. I just want to move on to the next part here, which I think is the one that I really want to share. Then I just going to do a sum up. But this one I'm going to take a little bit time because I'm going to give you some background what's going to happen in the near future. Now, the investment strategy for ESG in the time of rising interest rate environment or in a time of rising inflationary pressure globally. So now let's discuss about this. And before that, maybe I could ask you some question here. Let me just open up the chat box. You can get ready to answer me if you could. Now, for ESG fund, does ESG fund outperform the market during crisis? Now, I'm going to show you one chart here. I'm literally comparing this one of the largest ESG fund. I think their fund size is about 20 billion US dollars. So it's the largest in the world, called the iShares ESG Aware. And I'm going to compare it with Dow Jones. I think it's not fair for me to compare with something that an index that is much volatile like NASDAQ. So I decided to compare with Dow Jones. So my question to you is this. Now we have experience in 2022. Maybe you can look at a Dow Jones, is that since the start of 2022, we have experienced some meltdown, about down 30%, close to about 30% until somewhere in July this year. But somewhere in middle July this year, we also see that the market start to rebound, and especially when the CPI in the United States, it was from 9.1 to 8.5. So the market, that brought in some chill to the market rebounded. Then now we are here today. So I just captured this chart comparison between iShares, ESG Aware, and Dow Jones. I just want to do a comparison that does ESG fund related company perform better during downtime and also uptime. Then that's a good illustration here. So I just want to share with you guys, what do you think? Do you think ESG can perform better or worse off? I think I'm just going to move on, okay? If not, then we have not have enough time to also go through the Q&A. So I'm sure we have later we have more time to exchange some later. Now I just want to share with you, because I'm also very curious to know what happened. Now, beginning of this year, we could see that Dow Jones have dropped, that means from the top to the bottom, somewhere in the middle of June, and that's the trough. Dow Jones is dropped about 20%. And this ESG fund, it has dropped 26%. It means that you have dropped more than the Dow Jones. Of course, NASDAQ is about 30%. And how about the recovery from July, as you could see, to the recent high, which is somewhere in the middle of August? And who can catch up more? And what we see here is that the ESG fund, this ESG fund called iShares ESG Aware, is up 20% compared to Dow Jones is up 16%. Now, of course, when the Jackson Hole meeting, Jerome Powell mentioned about, I expect some pain to come, and that really sent a shock to the market as well. And reason from this recent high to now, Dow Jones is down 7.7%, and this ESG fund is now 8.4%. So of course, if you ask me about what's my conclusion, I would say that, so my question is that, is ESG related fund or stock better than the broader market? And I think my answer to you is that I just want to do this experiment and do a comparison here, is that I would say that at this point, I think the ESG is still so young to do a comparison. And that's my verdict here. I think it's not very fair to make an assessment at this point in time, because it's still relatively new and people are still learning about it. I'm still learning about ESG investing. So, but I do believe that in years to come, ESG investing, ESG's related companies will grow into maturity, and the liquidity will flow into ESG in some years down the road, but not now. So I would say that based on this comparison, of course, is not too accurate because we don't have much data to compare. It's just this year. So as along the way, you may want to track, because that's how I'm going to track along the way. As it moves down, I'm going to look at some of the big boys in ESG and just want to do a comparison. Does ESG create cushion during downtime, or during the uptime? That means from a trough, it start to move up. Will ESG also catch up faster than the broader market? So of course, this is a question that I want to know, and I think you also want to know, but for the time being, we just have to observe how it will develop. Okay, so let me just explain my thoughts about, of course, these are just my personal opinion. It is not a representation of CGS-CIMB. Now, so what I felt that if you ask me whether recession will come, the US recession will come, and I got to tell you, because as an investor, we have to chart out the future. It's important that as an investor ourselves, that we have to have certain vision that how the market will pan out. So if you're going to ask me whether the US recession will come, will hit, my answer is likely a yes. Okay, a highly likely a yes based on this. Maybe not official yet, but I felt that technically the recession is already here. Now, of course, the official announcement would be done by this organization called NBER, but I do not think that we have to wait until they announce, then we do something. We have to take a proactive role, just like all of us want to learn more about ESG investing right now. Maybe not now, but for the future, definitely. I think there's some attributes to it. But let's turn, I just want you to turn your attention to this S&P quarterly chart. And what is my little hack that I have to project that the recession likely to hit is this. Now, instead of using GDP, because NBER, what they use is 2 quarter of down quarter GDP. But what I felt that over the years, and this little hack is quite reliable as well. Now, in this span of the last 22 years, there were 2 recessions. And who are the 2 recessions? They are the dot-com bubble and subprime. Then in between, there's no recession. But if I'm not going to look at the GDP, I'm just going to look at the S&P quarterly chart. Okay, now, in this 22 years, in this chart, is quite telling that whenever there's 2 down quarters, it will follow by a series of bear markets using S&P, Nasdaq or Dow Jones or even Russell as a reading for US market. Now, so it's true that their recession happened during this period. There's only 2 recessions, and also happened that it was a dot-com bubble and subprime crisis. So how you read into this is that when we look at the quarter chart, means that every bar that you see here is 1 quarter, means 3 months. Every bar is 3 months. Now, you got to look closer, the last 22 years, there is no consecutively negative quarter. Only you can find that in dot-com bubble and subprime. Now, after 2 negative quarter, it followed by a series of bear quarters, and that lead to a bear market, then followed by recession. So I would felt that using the S&P is a leading indicator, and then followed by recession will come. Now let's look at the latest one, this year, 2022. And of course, the first 2 quarter ends in June, is already down 2 quarters, right? So this was captured in July, and this was captured in the 1st of August. Now, today is the 31st of August, and the market has slid down to about 4,000. Okay, I just want to use an imaginary line here. That market has slid down to 4,000. So to me, that the first 2 quarter was down. To me, it has sent a signal to me that highly likely that technically the market has already entered into a bear market and in the recession market. Now, the next thing is that we got to keep watch of the 3rd quarter of 2022. Now, 3rd quarter of 2022 will end in September, which is a month, exactly a month from now. So to me, it's very important because if you look at the past studies, we could see that in the subprime, I'm not too sure if you can see that there was a little inverted hammer on the 3rd quarter of that circle being circled subprime crisis. So we got to study very closely. If by September closing, to me is important. If September closing, it closed negative again. And I think that what I'm expecting here is that maybe we're expecting of many down quarters will be coming ahead. So that's what I see. And it's a bit technical, I know that, but let's look at the fundamental right now to support this view here. I think there's a very interesting chart. This is called the CPI, right? Now, I'm going to share with you the next few data, and that I will give my conclusion about ESG investing in a possible recession that will come. We should be expecting here. Now, let's look at the next one. Okay. Now, you have to understand that, can you see a 2.5? Now, what is this blue line and red line in this CPI? CPI stands for Consumer Price Index. It is one of the best indicator to measure the inflation of United States. So is Singapore as well. It's one of the better indicator. Now, blue is on all items, and red line that you can see is not including food or oil. So I will not include the red line because food and oil is one of the most essential things that we have. So let's look at the blue line here. is that I have drawn a 2.5% straight line. So I've drawn that. And that is the upper band of the last 30 years inflation number, 30 CPI. That means the last 30 years CPI, it has not quite crossed above 2.5. So it kind of crossed a bit, but that was in the average upper band. So you have to understand this here is that for CPI, it measured inflation. Okay, so over the last 30 years, that means what is the sense that I gather here is that the Fed, what they're trying to do here is that over the last 30 years, they do their best to keep the inflation below 2.5%. Of course, sometimes you'll just weave in and out. But what I could see, if I'm going to draw on this straight line, is that this upper band average line, that's why I call it, at 2.5%. That was the last 30 years. And when you look at this colorful table that I prepared, is that the first two was in blue. Now, it was in February 2021 and March 2021, it was 1.68 and 2.66. But you have to understand this here is that for the last 30 years, it has stayed below averagely about 2.5, 30 years. Now, then something happened here is that April 2021, the year 2021, from April onwards to October 2021, and it have changed. Now, I want to look at a chart here that it start to broke above this top band, and it start to make this never happened before over the last 30 years. So it start to move up, it start to trend up like never before from 4.5, 4.9, as you could see, all the way down to October 21, 6.24. Now, then what happened to the orange zone here is that I've colored that from November 2021 is 6.83. It means that for the first time for the last 30 years, it have broken the last 30 years high. That means the last 30 years, the highest point is about 6.5, broken above that, and it stay at 6.8, 7.1, 7.53, and it stay above the 30 years high. And what is the deep orange here is that the last 40 years high. So in February this year, 2022, it have broke above the last 40 years highest point, where that's happened in this year, February 2022, and it have stayed above 7.9 until today. Okay, so the coming CPI inflation, we're just going to continue to monitor that. And so if you're going to ask me that when do, as a market watcher, as an investor myself, inflation is important. It will affect my investment, affect my outlook, and how we're going to place our chip, right? So what I'm going to do here is that we got to ask ourselves this question, that if inflation is going to tame down anytime soon. So what will be my benchmark here is this. And I want you to look at this chart again. Look at this 5.3. Yeah, 5.3. Now, so when it crossed above 2.5, the first peak was at 5.3. So if in the future, the next few months, if even the CPI is at 7%, to me, it's not good enough because it is just a retracement for this uptrend. But when I think that the inflation, the CPI, will start to ease off and cool off, perhaps will move down to the 2.5 to below 5% range, it have to come down below 5.3. So that means, just want to share with you some hack here is that in the future, the CPI, US CPI, how we're going to track that. And how we're going to track that is that my opinion is, if it's even at 7%, it is still not good enough because it's still very high. It has to come down below 5.3. Then I will make a sense that maybe the inflation is taming off, which is a good news. If not, then inflation maybe still continue to be rate hot. Then interest rate will likely to continue to rise. And of course, that is not a good news for asset class. But I will feel that there's a good news for the ESG investment group. Okay, so okay. Now let me explain here. Now, so earlier I mentioned about ESG that so the question is that, is riding the ESG wave the next mega trend? Maybe not quite soon yet. Just now what we discussed here is that ESG is still refining. The sell side and the buy side as well, we're still refining. Company are still following guideline and see how at best they can work it out. So definitely what I see here is that earlier I mentioned of the millennials, and they are large size, and they are really into ESG investing. So as the time grow, I felt that the ever if the next crisis, if I'm right, that the coming crisis is going to be an inflation crisis, then I reckon that this inflation crisis may not going to be a V-shaped recovery that we have experienced over the last many cycle. So my take is that the recovery is going to be a U-shaped recovery. Okay, U-shaped recovery. So that will give a lot of time for us right now to go and understand a little bit more about ESG investing. So in short is that, now what's the next one here? Now the next one is that even the large institutional investor have publicly declared ESG criteria will guide in their decision-making on investment decision. Now, so my take here is this. In a time of, on the bear market, say for example, so when we start to, let's say we have some ESG position already, and I felt that given time, in a time of uncertainty, liquidity is important. And I could see that there's a much fund flow towards all this ESG investing. So you have to understand that ESG related company is not immune to the broader market if the market turn bearish. If the market come down, it will still come down. But I felt that the magnitude of coming down may be a little bit cushioned because of the liquidity in the market. Now, in a time of having this U-shaped recovery, and when it's about to pick up, it will be a few years by now. But it's always good to start to engage ourselves to learn more about what is ESG investing and who they are, and are they compliant to the ESG guideline. So these are the years that we can dig in to learn more about them. So when it comes, I also believe that there will be few years down the road, the recovery by then, it will be faster than the rest of the broader market. So that's my take about the ESG. And with that, before we go into the Q&A, and that's my Facebook page. So every day I will spend about 1 or 2 hours to read news. Then after that, I will put in my summary, my thoughts, my inflection on my Facebook page. So you can follow my Facebook page. Is my name, Konhow, Konhow, joined together. And this is what I posted on 17 December. And that's why I take clue on 14 December when Jerome Powell mentioned about inflation is no longer transitory. And I tracked the market very closely here is that, and I saw a divergence. Divergence means that the market, that bull market, you have to understand that December 2021, that was last year, market is still very bullish. But when he made a statement on 14 December for the first time, and before that, he kept on saying that the inflation is transitory because of the opening of economy. The inflation is just going to be short term. But when he said that 14 December, I knew that 2022 is going to be a challenging year where interest rate may continuously going to be hiked. And until today, I think his statement is still even more aggressive. So I think he's giving a lot of clue to the market that inflation is not going to tame down anytime soon. But the good news is that we recognize that. Then, of course, then we cannot be passive. We take an active role. For yourself, I hope that you clear off some passive stocks and keep it liquid, because once you have liquidity, when opportunity arises, you can always roll in to opportunity when it arises again. Okay, so that's what happened. And the recent low was on 17 June. And then the other one is a YouTube, my YouTube channel called Invest and Trade with Insight. And I've been posting weekly video on some insight. And just to give you some highlight that I hope that will motivate you that it's possible to do it. That on this turn, somewhere in the middle of July, that through technical study, through that video, I think it's a past few video, we spotted the turn. And this peak somewhere in the middle of August, that we also spotted a peak. And it can be done. I hope that it can inspire you that to get into precision, it is possible through technical study, through a combination of technical, and also through a combination of understanding macro development as well. So we combine them together. So that's my channel. You can follow that called Invest and Trade YouTube. Invest and Trade with Insight. And lastly, that's my email address called konhow@weipedia.com. If you have any questions that maybe during Q&A segment, we didn't answer that, do you have time to answer that, you can always email me. I will do my best to reply you in a short while. So I just got to pass this time back to Nixon again.
Yeah, great. Thanks, Kong Hao, for sharing. Very interesting. I think there's two key points that you touched on. One is about investing in ESG. You cover some of the basics, why we should look at ESG. And I think the other part is about the current market outlook, which is very interesting. And I think it's something that all of us are concerned about, whether with our existing investment or our future investment. Yeah. So with that, before we go into the Q&A, allow me to share my screen first. I would appreciate the audience here to give us some feedback on this session, so that we can actually improve and as well as bring to you more of such session. Kong Hao would have another session in us 2 months from now. And for any topics that you want him to talk about maybe, or to explore with everybody, you can also put in the feedback in the online feedback form that is on screen here. The QR code is there, and let me also share with you the link via the chat. Okay, we really appreciate all of you to give us the feedback. Also tell us what you want to hear from Kong Hao in the next session. And we definitely look forward to learning together from Kong Hao. With that, I'd like to open the floor to questions. So any questions, please do feel free to key in the Q&A box. If you even want to ask directly, we welcome that. All you need to do is just click on the show raise hand icon on YouTube, on the Zoom, and I will unmute you and you can speak directly. We have one question in the Q&A box from Jenny. So I just read it out. Do you think W-shaped recovery is possible for near future, or it's more on U-shape? Thank you. Yeah, Kong Hao, you want to?
I think that's the part I will not know, because only the market will know. W-shape is possible, and looking at the situation that is a global inflation, I would say that highly unlikely it's going to be a V-shaped recovery after a crisis. Yeah, because the situation is very different. That if you look at the last 40 years since 1980, or from that time period I mentioned about the Asia crisis in 1996, 97. And I think there was one crisis I still remember during the National Day speech. Our PM, Singapore PM, mentioned that it's possible going to be, I think that was 2008, if I remember. He said that likely it's going to be U-shaped recovery. But I think all of us can't guess that, because even the head of the country cannot predict the market. So I think the important thing is that we don't predict the market. So then I also agree that maybe a U-shaped recovery, but we never expect that it was a V-shaped recovery. Now, then I think on today that the possible that the crisis will come and likely may come. And say, for example, that means your question is that advance ahead, that when the dust settle, yeah, that means the dust settled. And at this point in time, my strategy is to keep my position light with much liquidity, because when investment opportunity comes again, I will definitely roll in, especially my consideration will be the ESG investment part. Then I would say that I still have to make a call. That means when the dust settles before the recovery, yes, W-shape means that the behavior science behind W-shape means that market is uneven. It's quite volatile. It form a W-shape before it recover. It's possible. But I reckon that between W-shape and U-shape will be the likelihood, because I think that if you study into the CPI that I presented about the last 40 years, never happened before that the last 30, 40 years, it broke above the 2.5%. And you could see that the Fed has tried very hard over the last 40 years to maintain and let the CPI inflation number stay below 2.5. but something just happened over the last 2 years. For the first time in history of 40 years, it trend up like never before, right? So it gives me a clear signal that perhaps this inflation, I know the reason, but I don't think we have time to discuss that you have to understand that the inflation is beyond just supply chain and the war that's happening around. And behind the scene, I believe that there's some undercurrent, which is, maybe I can just give you the answer for you to think about. So the supply chain that started from COVID-19 and the war, which started this year, somewhere in February, the Russia-Ukraine war, it just add the whole environment more pressure of the inflation. But before that, there's something else. The something else is that since 2008, the many nations has been printing a lot of money. So we know that when money is printed, you just cause dilution of currency. When currency dilute, things will become more expensive. So the supply chain that started because of COVID and the war is just a trigger to an underlying existing problem. Yeah. So that's where you see that when the stress start to come in, it break above 2.5. So for you to think about, therefore, I think that when the market start to bite in, when it comes, the recovery will not be so soon this time around. So that's based on some good judgment between the technical and fundamental understanding. So just for you to take back. So yes, Jenny, right? I think you asked the question. Likely, yes, a W shape and also U shape, but to me, there's not much difference. W shape means that when the dust settles, the market will get more volatile. Yeah, U shape means that the market is get really boring, but when it recover, you have to be sharp enough to pick up because it's U shape, right? So it come like a thief. U shape, the market is so boring that when it start to come in, you have to be very, very sensitive about what's happening. Yeah, so maybe by then it happened, you can drop me an email. We can discuss about the market, but that will be a few years down the road. Yeah.
Okay, great. Maybe that leads us to the next question by Xiong Ching. He or she, sorry, is asking, U-shape roughly takes how many years gradually to recover?
Okay, I think that tonight the question is that this kind of question nobody knows, right? But what I can tell you that how I know that the 18th of December I posted on my YouTube that suggesting that market is heading down was because of the peak has already established. Yeah, so you have to understand. Okay, let me just ask you a very psychological question here. If you ask me what's the U-shape, how many years, nobody knows, because from now till then, a lot of situation may change. A lot of new elements will come in. So I do not know. Okay, let me just give you some principle on behavior science of understanding here is that if I'm going to ask you this question that can we pick the top? Do we know that when the market peak? We will not know because no one knows, right? Okay, now let me give you another proposition here is this. When the market peak past 10, it start to drop. Based on the current circumstances, will we know that the market has peaked? And my answer is that, yeah, I think I will know because the peak already done, right? So that happened to be about 18 December 2021 to maybe January. So my confidence back then was the market really peaked somewhere in November. And looking at the situation, looking at what Powell have said, the federal chairman have said, and look at the CPI number, because then I'm already aware that CPF number have definitely broke above 2.5 and staying up there in a very trendy market. So something is wrong about market. So, but then in November, early December, the market has already peaked. So my proposition to you is this, can we pick the top? We can't. Nobody knows where the top is. But when the market peak, will we know? And my answer is yes, based on certain element. So similarly is that how long the U-shaped recovery will last, right? So I'm going to ask you the same question, but reverse manner is this. Can we pick the bottom? The answer is no, because nobody knows where the bottom is. Then the second question, which is more important, when the bottom is established, past 10, right? Will we be able to tell? My answer is yes. Okay, because when the dust settles, it forms a lowest point, then things will start to get very quiet and things will start to develop. When it develops, the market will start to trend up, right? So at the point in time, when we look back to the history, the low has established, we should be able to tell, because then we're able to include other fundamental reason as well. It's just like right now, we are at 31st of August 2022. When we look at the quarterly chart earlier, right? So if you ask me, have the market peaked in December, November 2021? Based on the quarterly chart, it's just a 3-bar chart, right? I would say that based on this point, my answer is yes, the market has peaked since last year, December 2021, and maybe we're just at the beginning of more downside ahead. Yeah, so that's my proposition. And that kind of gel well to the two answer that I asked you. Has the market peaked? That one we will not know. But when it peaked, can we tell at this point in time? I think we can tell based on a lot of element, technical and fundamental reason. I do believe that the market will be much more challenging. But having said that, I'm not trying to paint you a very dark picture and then CGS-CIMB will not invite me to come back. So, but I think I'm just trying to give you a real picture that what's ahead. And I think in times like this, I think the time that we have is never the same like the 20 years ago. Today, we have the CFD market. We have a broker that is connected to international market. So my mandate is US market. I will not hold for long term at this point in time, but that may not be true for the Asia market. So in fact, Asia market, my proposition right now is that I'm slowly accumulating them. Yeah, because I find that there's value in Asia market. And if you study into the fund flow, I think it's available in SGX. I did write a note to them that maybe they can do out some chart for the fund flow so that their audience were able to see better. And we could see that a lot of funds are pouring into the Singapore market. So which my guess is not wrong, that as the West may be coming down, I believe that the Asia are picking up. So if you look at the comparison between the magnitude of the down move of the US market over the last half a year compared to the Asian market, in fact, the Asian market have not dropped much compared to the US market. Yeah.
Okay. Thanks, Mohammed. That's very good insight. In fact, maybe I will ask also. So you're saying that Asian market is still providing opportunity for good investment, even at this point in time.
Yeah, I would say that the just like the ESG, which I believe, but not now for ESG because it's still refining. As the world enter into inflation crisis, it's not here yet. Inflation crisis is not here, but I reckon that it will come. Of course, then you see there's a lot of fun in the market, a lot of money in the market. So all this smart money, they also know. Because if at my level, I know, they will also know, right? So all this top money will ultimately have to flow to somewhere. And I believe that they are seeing Asia. Of course, when US market, the West market start to come down, Asia market will not be spared, but is the magnitude of the down move, I do not think will be that great, which is already happening. If you do a measurement from the peak of this year to right now, comparing the nation, and I think Singapore is, honestly, I believe that we're in the positive zone than the negative. So, so that is quite telling that the fund flows is into the Asian market, especially the Singapore market.
Yeah. Okay, great. So with that, maybe we come to the question from Kok Ping. He's asking that since we are fairly sure that recession has begun to set in, is it prudent to cash out from unit trust funds and share market now and reinvest when the market has bottomed out?
Well, I think it's a very good question here, depending on what kind of fund you're talking about, because the fund, there's US fund, there's Asia fund, there's Tiger fund, there's commodity fund. And basically my mandate, based on what we've discussed today, my mandate right now is for US market, I will just would be happy to trade them. Trade them means that I have no commitment, just getting in and out in the short term. For Asia market, I'm not exactly sure, but I don't mind to slowly accumulate them. Yeah. But for the commodity market, where I think you can check with CGS, CIMB, I think they have some commodity fund or CFD or futures as well. I will buy them. But when I say, you see, the three market is that US market, I'll trade them. Asia market, I'm not exactly sure, but I don't mind to slowly accumulate the good ones. For commodity, I'll just buy them. When I say buy them, please don't buy tonight, because when I say buy them, you have to be very tactful as well. Buy on retracement as well. Okay. So yes, so when you say fund, what kind of fund are you talking about? If you talk about US fund, yes, I would prefer to liquidate them, because from the top to now, it's just down about 20% or less than 20%. It's still I think there's still a lot of room on the downward pressure. But if you talk about resource fund, when I say resource fund, you talk about the commodity fund, then I don't mind to buy them. So what fund are you talking about? So I think it's more important, a better question to ask that, which market would you want to sell them? Yeah. So I think you hear me is that my proposition is US to trade them. That means no long-term commitment. Asia, I don't mind to have start accumulating right now, because it's still around the base. And commodity, I felt that it's still cheap. A lot of commodity prices are still quite cheap. Yeah.
All right. So I hope that answers your question, Koping. The next question from Jenny is, if CPI starts to drop towards 5.3%, does it mean that the market is recovering soon?
I think when CPI starts to drop to 5.3, it will break this flow of charging inflation. Now we have to understand that the inflation numbers are charging. Yeah, it's trending up, it's charging, it's scary. And I think UK or Europe just announced that their inflation, the CPI, their CPI is the highest of all, above 9%, just announced about maybe 3 hours ago. So when it crossed below 5.3, it kind of break this momentum, not exactly out of the safety zone, but technically, if it can come down to 5.3, to me, that's a good news. It means that you have break this flow of charging inflation that we're experiencing in US. And of course, then the Fed still have a very important job to do. The Fed, if it drop below 5.3, they still have to bring it down to below 2.5. So the next hurdle is to bring it down to below 2.5. But definitely, if you can cross below 5.3, it will be good news. So what I'm suggesting here is that in months ahead, if you find that CPI is at 7.6, I will not be too early to cheer about. To me, it could be just taking a breather before another run up. So that's what my experience is, and I hope that just to share with you guys.
Okay, great. There is two questions in the chat box actually. So let me read it out. So Christada is asking, when you say commodity, do you mean gold?
Commodity, I think especially the essential commodities are important, because essential commodity means that that day to day we use it, we consume it. These are essential commodities. Like for example, crude oil. In fact, crude oil is doing a retracement during this period. In fact, I was just monitoring this week. I'm quite interested to look for opportunity to get into the crude oil. From above $100, it have come down, so it's quite nice retracement I'm talking about. Natural gas, is that something that Singapore we use natural gas a lot. Food, soybean, all these are commodity, right? Gold, I'm not exactly sure. You just got to time it, because to me, gold is definitely, if you look at long term, it's still up, but I do not know when the timing for gold will come, because if for gold to pick up, the US dollars must drop. Yeah. So gold is, in fact, when you talk about gold, it's actually you have to understand that gold is not just a commodity, but gold is a currency. Currency against who? Because the currency is always a pair. Gold is a currency against US dollars. So for gold to pick up, US dollars have to drop. At this point in time, I don't think that gold will go up anytime soon, but is maintaining a position well on the uptrend. Because when the Fed adopt the policy of they're going to increase the interest rate, and that will bring attractiveness to the US dollars. So if attractive US dollars go up, gold will be under pressure a little bit. So gold, I look at it very differently. It's a different type of commodity. It's a currency against the US dollars. Yeah.
There's another question in the chat from Florence. She's asking, Singapore market in particular, is it a good idea on buying banking stocks now or wait?
I think for banking stocks, I don't object to it, but banking stock I would refrain at this point in time because the cycle is different. For banking stock, you have to understand when's the best time to buy banking stock is during inflation, but not in a weakening global economy. Now, what I'm trying to say here is that the best time to buy a banking stock is when the economy has somewhat collapsed and is picking up. That means at the trough is picking up. So once the economy started to pick up, it created inflation. That's the best time to buy the banking stock because that means the upside, there's still a lot. But now the situation is very different because the US stock market is still around a high, but we have a high inflation. So my concern about the banking stock is that if the situation is very different from what I experienced over the last 40 years since I became matured, yeah, or maybe being a 20-year-old man, so the last 30 years, right? It's very different because the market is still around the top for US, quite risky, but yet inflation is so, I would say, use the word quite shocking, and interest rates on the rise. So that means when interest rate on the rise, there's always a risk that the stock market will move downwards, and that's not good news for companies, and that may not be a good news for the bank because that's why I say you have to understand about the cycle, and it's a very unusual cycle we're in because on a higher interest rate, where the stock market is still around the top, I'm referring to the US market. So as it continue to increase the interest rate, that will give a lot of pressure to a lot of these companies. So my concern for the bank is that I would choose the bank that's a bit more conservative because in such an environment, I'm concerned about the banks because bank business to give out loan on bad debts, yeah, on loan defaults. So that what we could see here is 2008. That's not too far away. That during the Lehman crisis, you could see that some banks go underwater, right? So, so during a crisis, we have to be very careful that bank may not be a good pick. Yeah, though you may say that interest rate higher, the bank will earn more money. But that really depends on where the cycle that you're talking about.
Okay, great. Let's go back to the Q&A box. Question from Anonymous. Since we're talking about inflation, the question is, Christmas incoming, Russia reducing gas flow to Europe, estimating how high inflation can top. So it's basically asking, how high do you think that the inflation, maybe the CPI can go to?
I think this the question is very similar to the first two, that a question that no one knows. No one knows that. It really depends on, now I think we just read the news today, right? That Russia stopped the flow to France. Mm-hmm. And definitely that will cause a lot of stress to the market about inflation is not going to ease at all. It will add more pressure to it. But your question is how high you'll go, honestly, is a question that I think our maker will know, but not for us to know, right? So, but what we bring comfort here is that I hope that in this discussion here is that at least we are well guarded, that we know that inflation is not going to come down anytime soon. So if you are into a lot of exposure, you just have to wind down a little bit. It may not be a bad thing, or maybe focus on something a bit boring like Singapore. So yeah, I know a lot of people say Singapore is boring, but I think Singapore is one of the best stocks around. I partnered with SGX for a long time, but over the last 10 years, I really never advocate about Singapore stocks a lot because it's not a charging stocks, right? But during this period, for the first time in my relationship with SGX for the last maybe about 12, 15 years, I work closely with them. And I would say that moving forward, I have to advocate Singapore as a market because Singapore became a safe haven. Yeah, it can be boring, but at least there are good dividend to pick up. And in the context of U-shaped recovery, I think Singapore, there's a good chance that we may be the first few countries or first few equities that the market will go up. And look at the physical scene in Singapore. There are more high-tech companies that have set up their headquarters here. And I think the good news is that if you look at the EV company, the China EV company, NIO, NIO have also listed their company in Singapore, and that's definitely a good news that Singapore are attracting the technology stocks coming to Singapore. You will never know that when the STI is going to reshuffle their index. At this point in time, I'm gradually accumulating STI ETF fund as well. Not a recommendation, but if you do not know what to do, then accumulate the STI ETF fund as well. I think that may not be a bad option. Yeah.
All right, great. There's a question from Sok Ching. Can I know the trend of US dollar? Will it further strengthen? Yeah.
Okay, this one I have to I need to look at the model to let you know, but now I don't have that. But I think just based on the logic of Fed is going to commit to increase the interest rate, that will strengthen the US dollars, as we could see that. If you look at since the first time Jerome Powell mentioned about inflation is no longer transitory, on that day, I still remember 14 December 2021. And since then, he has sent a signal to the market that they will increase the inflation or increase the interest rate. And since then, the dollar has been strengthening. So I think based on that logic, my answer is yes. Yep. So, but of course, we got to keep track. Yeah. So based on that logic. So yeah, because as I don't think I'll mention the second part. So if not, then they'll get to a bit too complex studies.
Okay.
Yeah.
The next question is, do you think commodities are still cheap?
Yes, definitely. I'm seeing commodity are still very cheap. Look for the laggards. And if, of course, when you say cheap, depending on what kind of time frame you're talking about, right? So if you talk about the next 2 years, I think the commodities are still cheap. But if you talk about the next 2 months, I'm not too sure because your time frame is different. So why I say so, because I think if you're going to ask me about commodity market, then I got to ask myself, or you can ask yourself that, what do you think about the next 2 years inflation scene around the world is going to be like? So if your answer is going to be, that means you've got to answer yourself that inflation scene around the market is still not going to go away any soon. It may be worse. Then I think commodity is definitely in my bag at this point in time. Okay,
great. Okay, let's take the last question.
Yeah, but do look out for the, I'm going to post my YouTube at 9 p.m. It's scheduled at 9. I'm going to talk about the crude oil. I think that one is really interesting. You should take a look. 9 p.m. My YouTube channel, I think I just shared in a chat box. It's called Invest and Trade with Insight. Yeah.
Yes. Yeah. Okay, great. Let's see the last question in the chat box. Chrisada is asking, China stock is best time to buy. So is it a good time to buy China stock right now?
Yes and no. Of course, China stock, you got to be very selective. Most of the popular China stock, they do not pay dividend. Those popular household names that you know, I know, most of them, they do not pay dividend. So the question is, if we believe that it's going to be U-shaped recovery, means that we're just accumulating them, but the market do not move up and they do not pay dividend. So do you want that? So, but I think the best portfolio is that you can have some China stocks, unless you can find some China stock that pay good dividend, because as it enter into a U-shaped recovery, so one of the better investment proposition is that if it's ever going to be a U-shaped recovery, not even here yet, right? But now we are actually advancing our thoughts, which is good. So we are planning ahead. So if it's U-shaped recovery, the best investment is that as our capital gain kind of stuck there, not moving much, but yet every quarter, every year, every half a year, we're still receiving dividends. And so that's something to be comforted about. So it's always about accumulation in a U-shaped recovery. I think what's the something that we're hopeful to look forward to is capital gain. After the U-shape, it will recover. Of course, the timing, no one knows. And I hope that maybe next 2 years or 3 years that I were able to continue to be engaged with CGS-CIMB. Maybe 3 years from now on 31st of August in 2020, 3 years now is 2020, 5. Then we able to spot it that maybe the U-shape is about to end, and yeah, maybe by then, I do not know.
Yeah, Okay, so with that, thanks Kong Hao for your insightful sharing. Allow me to just share my slide again. I just want to remind everyone that this is part of a series of webinar from Learn from the Pros. So beside Kong Hao, we have Fu Sing Fu. So earlier I shared Sing Fu's super stock workshop. So Sing Fu will be touching a fair bit on technical as well. So Kong Hao did mention about how do we see the trough, right? We only know when the bottom has so-called form. We only know the top and the top has form. All these are very visible on the chart. So I think if you attend Sing Fu's session, you will also have a great insight on that. So if you have not registered, you can register by this link. The QR code is there, and let me share the let me see the URL as well. Okay, again, so that you guys can register for it. All right, and also this is just some details of what he'll be sharing. He'll be sharing his close to 30 years of trading experience. So definitely look forward to that. And this is just a quick snapshot of the upcoming webinar that we will be having. We will be having a DLC webinar by SocGen on 13th September. So if you are looking to how to hedge your portfolio using DLC, don't miss out this seminar. Sing Fu's Super Stock Essential Workshop will be from 15th September to 6th October. Sorry, that's my mistake there. For 4 weeks. And then, of course, we'll be having Kong Hao back again with us in October 27. So right now, we are still open for topics. That's why your feedback to us is very important, because you can suggest to us what topic that you want to hear, and I will let Kong Hao know. And maybe Kong Hao can pick a topic, and then we will discuss that and all learn at the same time when he comes back to share with us on 27. But you can pre-register for the workshop. So allow me to share all the links for those 3 sessions here. Okay, just let me copy and paste. All right, so these are the links for the 3 upcoming webinars. So don't forget, of course, lastly, do give us the feedback. Don't forget that. And at the end of the feedback form, you can actually suggest topics that you want us to share with you when Kong Hao next comes back. So let me see if I can get the feedback form again. Okay, done. So all the links are here. With that, we'd like to thank you for your participation, and of course, great gratitude and thanks to Kong Hao for your sharing for tonight, and also answering all the great questions that we have on the floor. Yeah. Any last words, Kong Hao, you want to have a quick parting?
Yeah. So
yeah.
Yeah, definitely. So earlier we discussed about the because of the global inflation pressure that is coming ahead at us quite intensively. So definitely, I think the months ahead and years ahead will never be easy. But as we discussed about ESG tonight, that as it get mature, and I believe that in time to come, it will score and soar well as well. So do look out for all these ESG companies related and study into them. So there's no free lunch, but it's always once we have certain understanding, then as we put our foot down and to study into them. So when opportunity arises, I'm sure that you're able to capture many of them. So with that, I just want to thank you for staying through over the last 1.5 hours. It's been a pleasure to be with you. And of course, together with CGS-CIMB, thank you for the invitation. Thank you.
Okay, all right. Thank you, Kong Hao, and thank you, everyone, for your participation. So we look forward to seeing you again soon in our upcoming webinar. So with that, good night, everyone. Take care. Bye-bye.